Good morning, students. Morning, everyone. So we are discussing depreciation chapter. We'll continue with the depreciation chapter. In the previous class, we have discussed about what is depreciation, when it is called amortization, what is the difference between depreciation and amortization, and how depreciation is calculated, the different methods of calculating depreciation. We have discussed that, right? So when it is called depreciation, when it is called amortization. Anyone? It was yesterday only. We didn't have a gap also. So I think you should remember them. Anyone who can answer? What is the difference between depreciation and amortization? Both are same. Okay.
Ma'am, depreciation is on tangible assets and amortization is on intangible assets.
Okay. Very good. And what are tangible assets and what are intangible assets? Just give me the answer also, and then we are good.
Tangible assets, we can define them as a machinery, building, or anything which can be touched or felt. And amortization, just like copyright, patent, or anything which can be touched or felt.
Okay. Okay. Any example of intangible assets?
Yes, patent, copyright, other anything just like a song, copyright, or patent, etc.
Okay. 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 Yeah. Thank you. Very good. And I'll ask one more person. I think someone is raising hand. Yes, Andra, tell me what are the three factors? We discussed about three important factors to calculate depreciation. Remember? Hello. Anyone else? Yes, Sarala.
We can see that in assets, in tangible assets and intangible assets. Tangible are those physical existence. Example.
No, I changed my question. I asked a different question. Maybe you didn't hear that. I asked what are the three important factors we should consider for calculating the depreciation. For depreciation, I told you three important factors, right? We discussed that yesterday. So what are those three factors?
Yeah. Estimation useful life, and
Okay.
cost of the asset, and
Okay.
residual value after the useful life. Another name is called scrap value. These are
Scrap
the factors we should consider.
Okay, good. Yeah. So I think this was one main thing that we discussed yesterday about the three factors and how to calculate the depreciation, and also the difference between tangible intangible assets, and when it is called depreciation, when it is called amortization. These two were main things. And also after that, we have discussed the methods of depreciation. What are the two different methods of depreciation? Any new person? I think we have Sandhya. Yeah, Sandhya.
Straight line method and written down value method.
Little bit louder, ma.
Straight line method and written down value method.
Or there's one more word for it, which is diminishing value method also.
Yes, ma'am.
Right. So in straight line method and the diminishing value method, or the WDV method, what is the difference?
Straight line method will calculated by fixed cost of the machinery, like same value will be calculated.
We can say constant charge, right? Can
Yes,
I say that?
Yes, ma'am.
Constant charge. The depreciation will be constant for all the years.
Yes, ma'am. And then written down value method, the balance carried down value will be on that value will be chargeable depreciation.
So the depreciation will change every year, correct? It will change depending upon what is the written down value or the carrying value at the end of every year. The depreciation is calculated on that. So it changes every year. It is not constant throughout all the useful life. So that's the difference. Okay, good. Any new person who can answer? Not the persons who have answered till now. Now I want the journal entries. I told you two different methods. I mean, two different ways of writing the journal entries. So I want those journal entries. Anyone? Any new person? Okay, you are answering no, so let us give a chance to someone who don't open up. Anyone else? Garvit, you want to answer? Journal entries, I'm asking journal entries. Same, very simple. We did a problem also on that. Okay, Sarla is only raising her hand. Anyone else? Okay. Yes.
Yes, ma'am.
What are the journal entries?
Ma'am, the general increase of depreciation is depreciation account debit to assets,
Okay.
and the other is profit and loss account debit to depreciation.
No. Profit and loss account debit to depreciation.
Depreciation. Yes,
Okay.
ma'am.
This is one way. The other way?
And the other way is depreciation account debit to accumulated depreciation account,
Or
and
the
the
other word for accumulated depreciation is also called
uh, that's provision for depreciation. Provision for
correct.
depreciation. Ma'am.
Right. And the other entry will remain same. Transferring it to P&L statement will remain.
The payment will remain same. P&L debit to depreciation.
Very. Okay. Yeah. I think you all are good at this now. So I'll move on. And I asked you to do this problem illustration too. Did you all do this? Just give me a thumbs up if you have done this problem, because we have done already the first one, illustration one. Only difference was that I have done the calculation of WDV method also. You just have to do the machinery account by changing this. Did you do that? Yes, no, yes, you have done. I don't know about others. Yes, okay. Many of you have done it. Good. Okay. So now I'll move to the other methods. Now we will have few other methods wherein when you're calculating depreciation, few things have to be considered. Okay. The first one that is called as sum of years of digit method. In this method, what happens is, now I'll take an example here. Sum of digits method matlab, if you have a useful life of 10 years, then how will you calculate depreciation? Generally, you will take cost divided by 10 years. Then you will get your depreciation. This is how we generally do when useful life is given. But in the sum of digits method, what happens is you will take 10 years. Let's suppose 10 years. So 10 plus 9 plus 8 plus 7 plus 6 plus 5 plus 4 plus 4 plus 3 plus 2 plus 1. So what are we doing here? We are trying to add all the number of years, like digits are added physically, and this will be considered for calculating the depreciation. Okay, what is the total of this? What is the total of this? 10 to 1. If you add all the digits, what is the total? Some of you gave 55 and some of you gave 50. I'm considering 55 because most of them gave 55 as the answer. I'm thinking 55 is right, if I'm not wrong. 110. How 110? I don't know. 55. I'm thinking 55 is the right answer. Okay. So this is one way of doing it. Or you can also use the formula n into n plus 1 by 2. This is also the other way of doing it. N means what? The useful life. 10 into 10 plus 1 divided by 2. This way also you will get the same answer, 55. Try this also. 10 into 10 plus 1, which is 11. 110 by 2 will be 55. So either you can use the formula or you can directly add all the numbers. Both can be done. Okay. Suppose it is 5 years. Then how will you do? So 5 plus 4 plus 3 plus
अभी
2
आपका intention
plus 1. This will be the answer. Or you can take formula 5 into 5 plus 1 by 2. This way also you can do. Anyway, both will give you the same answer, right? Now what to do? We have calculated the sum of the digits, but how to calculate the depreciation? That is the main concern, right? So how will you calculate depreciation in this way is the first year depreciation. First year, the depreciation will be, suppose the value is 1 lakh, cost of the asset is 1 lakh. This into 10 by 55. Okay. Now the second year depreciation will be 1 lakh into 9 by 50. And third year will be 1 lakh into 8 by 55 and so on. So it will continue like that. It will continue for the 10 years. This is how depreciation is calculated. It is almost like doing WDV method or straight line method, but we are trying to do it in a different way, wherein the sum of digits are calculated. How did we get this 55? I told you how we have calculated this 55, two ways of doing it. And 10 is nothing but the year useful life of the asset, and you bring it down. Now in the first year, why are we taking 10 is, in the first year you know that the useful life is 10 more years. After 1 year is done, now you're in the second year. When you're in the second year, how many more useful life, how many more years you have useful life? Only 9, right? So that is when the second year you take 9. After 5 years, what happens? You only have useful life of 5 years, so you take 5 by 55 and so on, like that. So we are trying to see what is the remaining useful life that will be taken in the numerator. Am I clear with this? Yes or no? Just keep responding so that I know if you have some questions, I can take it up. Okay. Why are we taking it in a reverse order in the numerator? That should be clear. And how did we get 55? That should be clear. This cost is anyway same. Whatever is the cost, you're going to take that. Okay. Let us do the problem. Okay. Now look at this question. Look at this question. Illustration 3. Now what is given in this illustration 3? So Mrs. Akash and Co. has purchased a machine for 10 lakhs. The estimated useful life and scrap value are 10 years and 1 lakh 20, which means the estimated useful life is 10 years and scrap value is 1 lakh 20,000. Both are given to you. So three factors we need, which is cost, useful life, and scrap value or the residual value. All the three are given to us, right? Can we calculate depreciation? Yes, we can. And the machine was put to use on 1st January 2017, right? Okay. Now what is required? They're asking you to show the machinery account and the depreciation account in the books for 2022. They're not asking you for the year of purchase. I think it is almost after 5 years or 6 years they're asking you to record it. I mean, after 5 or 6 years, how will you record it in your books of accounts is what they're asking. And which method they're asking you to use? Sum of years digits method, which is what we have discussed right now. So you will have to use that method and calculate the depreciation and then show how the machinery account and depreciation account is affected. Machinery account and depreciation account will have the same journal entries. The journal entries will not change. The debits, credits, the balancing figures, how we have done previously, the same thing will be there. The depreciation amount only will change. If the methods are changing, depreciation amounts will change. But how do you represent them in the account will never change, right? It will remain same. So that part is same, but what we have to do the depreciation calculation. So let us do that. I have done a little, homework wherein I try to have these kind of tables so that we will be a little quick enough in doing the problems because we have to finish the depreciation chapter today. I have done these tables for all the questions and kept them ready so that we can do them faster. Okay. So I'll do the first working note. Then we have machinery and depreciation accounts to be right. Now in machinery account, what is the first entry that is going to come up in machinery account? Hello. What is the first thing that is going to come up in machinery account? If you have to start from 2017, then you will have to take the bank also, but we are not doing for 2017. So you will have to, you can directly take the balancing figure, right? So I will have to have the balancing figure. But what is the balancing figure? Do we know that? We don't know what is the balancing figure. So we will have to calculate that balancing figure, for which we are going to do the working note. I'm doing working note 1. What is the cost of the asset? 10 lakhs minus scrap value. What is the scrap value? We have 1,20,000. Calculate this value. What is the value after scrap value? 8,80,000. Okay. 8,80,000 is value after your scrap value, right? And the useful life given here is 10 years. Now, we can't directly take 8,80,000 by 10. Why? Because that is straight line method. But here they're not asking us to do the straight line method, right? So which method you will have to follow here? Sum of digits method. Sum of digits method, matlab, you will have to take that format, whatever we have done. Now, let us calculate depreciation from 2017 to 2021. Look at the question. 2017 they have purchased, and they're asking us to do in the books of accounts of 2022, which means we will take the opening balance as at 2021, right? So we are calculating depreciation till 2021. How many years depreciation you have to calculate? 2017, 18, 19, 20, 21, which means 5 years depreciation have to be calculated. How will you calculate 5 years depreciation? The method that we have followed, you remember that? The 10 plus 9 plus 8 plus 7 plus 6 divided by n into n plus 1 by 2. This is how much? Calculate this one. Calculate this figure. Total. Denominator is 55 because anyway, I think we have done when we did the example. But what is the numerator? 40. Okay. 40 by 45. So now depreciation for 5 years will be how much? 8,80,000 into 40 by 55. How much is this? Depreciation for 5 years? 6,40,000. Okay. 6,40,000 rupees is the depreciation. But we want the carrying value, right? We want carrying value. What is the balancing figure? We need that. So for calculating balancing figure, minus depreciation for 5 years. If you take these two, then you will get your carrying value, right? So what is the value? 10 lakhs, and then depreciation was 6,40,000. How much is the value? 3,60,000. 3,60,000. So this is the carrying value at 1/1/2021. Agreed, everyone? This is the carrying value at the end of the 2021 year, right? Okay. Now let us go back to this machinery account. In the machinery account, what is the balance that you have to take? You have to take it on the debit side or credit side. The balancing figure should be on the debit side. So 1/1/2021 to balance brought down will be how much? What was the value that we have calculated? 360. 3,60,000. Done? Okay. And what is the next one? In the current year, what do you have to do? What you have to do in the current year, you have taken the balancing figure, it is on 1/1/2021, but in the current year you will have to take depreciation, which is 31st December 2021. By depreciation account, you will have to take this depreciation for the current year, right? Then we should calculate that also. Oh, sorry, it is 20. Yeah, you're right, it is 2022 only. Yeah, 2022. It's 2020. Yeah. Now I'm doing the calculation of depreciation for 2022. 8,80,000 into what will be the value? Can anyone tell me? Into what? What to take? What do you have to take here? Is it 4/55, 3/55, 5/55, 6/55? What do you have to take? That will depend upon how many years you still have, right? How many more years are there for? We have already calculated 5 years depreciation, correct? 5 more years are remaining. So it has to be 5/55. So it will be 5/55. So numerator is always what is the remaining useful life only. Okay. So what is the depreciation? Calculate the depreciation. 80,000. Okay. So by depreciation account 80,000. Now anything else we have to take? We don't have any additions in this year. We don't have anything else. So by balance carried down. How much is the balance carried down? Calculate the balance carried down. Two lakh 80,000. Okay. So on 1/1/2023 to balance brought down will be 2,80,000. Done. So machinery account is done. Now we will have to do depreciation account. This is again very simple thing. What do you have to write on the depreciation account? 31st December 2022. You have two machinery account. Machinery account. How much? 80,000. And on 31st December 2022, you'll write by P&L account 80,000 and close this account 80,000. This is okay. We have only done the machinery account and depreciation account for year 2022. We didn't do it for all the 5 years. That is why this balancing figure of 3,60,000 has come in. Otherwise, you have to take the total cost of the asset and then start depreciating every year for 5 years. Then you bring the balancing figure. But that part we have done in the working note calculation and then have calculated the machinery account. So working note 1 May, what did we do? We have calculated what is the depreciation for 5 years. And in working note 2, we have calculated the carrying value of the machine. And in working note 3, we have calculated the depreciation for 2020. Is it done? Any questions in this? This is easy, I know. Easy, but which number you take is very important. Pratik, you are asking why have we transferred to P&L account here, credit to P&L account, because depreciation is an expenditure account, right? All the expenditure accounts or income accounts have to be closed by the end of the year, and the balance, anything that you have to be transferred to P&L statement. That logic, everybody knows that, right? So any any expense accounts or incomes accounts have to be closed and transferred to P&L statement. So since depreciation is an expenditure account, we have transferred the balance to P&L statement. But machinery is an asset account, so you can't transfer the balance to P&L statement. You will have to close it. Any balance should be carried down to the next year. That is why we have carried down this balance here, 2,80,000, to the next year of 2023. I hope that's clear. Shall we move on? On subtract scrap value. Why are we subtracting scrap value? This is a question. Why are we subtracting scrap value here? Why don't we take the 10 lakhs cost directly and calculate depreciation? It is because scrap value is the value that should be left in your books of accounts after the useful life. I'll make it simple, and I'll do one simple example here. Just quickly look here. Why we are doing scrap value, I think that should be clear. Let us take very small number only. I'm taking 1 lakh cost, okay? And 10,000 as scrap value, okay? Now, useful life, let us take 10 years. So in this question, what will happen? Depreciation will be equal to 1 lakh divided by 10 years, which will be equal to how much? Sorry, 1 lakh minus 1 lakh minus 10,000 divided by 10 years, right? So this will be equal to 90,000 by 10. So 9,000 is your depreciation for year, 1 year. Now, I'll show this. Cost is 1 lakh minus depreciation first year is how much? 9,000. Quickly keep telling me the values, no? I think this will be 91,000. Then depreciation second year 9,000. EP2, okay. EP2 and minus 9,000 is how much? 73, okay. Minus debt for fourth year 9,000. This is how much? 64. Minus debt for fifth year 9,000. This will be 55 or 56. I think I got 56 also, a few people. I think it's 55 only, if I'm not wrong. Yes, and then debt for sixth year is again 9,000. This will be 46,000, okay. Again 9,000. Oh my god. I'm doing this so that you will not have any more confusions about the scrap value, okay. 37,000, okay. Then eighth year 9,000. How much is the value? 28, okay. And then minus depreciation for ninth year is again 9,000. How much? 19,000. Okay. minus depreciation for 10th year is 9,000. This is 10,000. Oh, finally, we arrived at it. Okay. So now what did you understand? By the end of 10 years, this is the 10th year depreciation. I told that useful life is 10 years. So after 10 years, what is the value you have in your books of accounts now? 10,000. This is nothing but the scrap value. That is why we will remove scrap value and then calculate depreciation. If you remove scrap value while calculating depreciation, it is not considered for depreciation, correct? So whatever value will be left in the end will be nothing but your scrap value. So now what will happen at the end of 10 years? If you are selling this machinery, suppose I sold this machinery for 12,000, then what will happen? You have in your books of accounts the value of your asset is only 10, but you sold it for 12,000, which means it is a profit of 2,000. Yes, you have a gain of 2,000. Suppose you sell it for some 5,000, then it is a loss of 5,000. Now that is clear. So to be left with that value of 10,000 only, you will remove it in the initial. That is why scrap value is initially removed while calculating depreciation, so that after all the depreciation, all the years depreciation is calculated and removed, you will be finally left with the scrap value in your books of accounts. This will be the carrying value that you will have at the end of the useful life, which should be equal to your scrap value. It will be equal to scrap value if you remove it initially. Now I think I'm clear. We can know the scrap value. It is just an estimated value, ma. We can't say that 10,000 will be the scrap value for all the machineries. No, today you're estimating that the scrap value is 10,000, but after 10 years it can change. That is why you will have profit or loss. No, I have estimated that 10,000 will be the scrap value before 10 years, but after 10 years I came to know that the machine is having a scrap value of 12,000. Then I will have a profit of 2,000, but the scrap value came down, then I will have a loss. So it will depend. You will just do an estimation only. That is why it is called estimated or scrap value also. You can't say the right figure. Okay? This one? Anyone wants to write down this? If you want, I'll share this Excel sheet. Don't worry. Since this is an Excel sheet anyway, some are asking for the working notes if you want to write down or something. I'll share this Excel sheet. Don't worry. Okay? If you have missed writing something, don't worry. I'll share this Excel sheet. But you concentrate on the concept first. You understand it. If you are missing writing it, it is fine. I will share the working. I mean, I'll share this Excel sheet. That n into n plus 1 is nothing but a formula that is given to you. You can use that formula, or you can directly use this sum of digits like 10 plus 9 plus 8. If you do that, or if you don't want to do, suppose the useful life is 20 years, then what you have to do? 10 plus and 20 plus 19 plus 18 plus, it's a big number, right? So instead of doing that, you can use this formula n into n plus 1 by 2. So this Antra, you were asking this question from, I think, yesterday. I could not answer you. I'll see that question and then it passes by. So I'll answer this first today. She's asking what is loss by rewards. Okay, loss by rewards is something wherein it is like an abnormal loss. Okay, when some unexpected event happens in your organization, that is any loss due to some unexpected event will be all considered as abnormal losses, right? So any loss by rewards means any unusual event or unexpected event is happening in your organization due to which you have a loss. All those are considered as loss by rewards. Now what will happen to all these losses? What is the treatment? Treatment is nothing but I told you about abnormal losses before also. Abnormal losses cannot be taken to your inventory or cannot be taken in your trading account. They have to be taken to your P&L statement only. All these abnormal losses have to be recorded in your P&L statement, right? I hope I am clear with your question. Which working note you're confused? I think this working note is simple. Cost of the asset, and then we remove scrap value, we got the carrying value. And then we have calculated the depreciation for 5 years. How did we calculate depreciation for 5 years? We have taken this formula and then we have done this calculation of the carrying value. Once the carrying value is there, once you have the depreciation for 5 years, cost of the asset minus the depreciation for 5 years will give you the carrying value. It is nothing but cost minus depreciation for first year, second year, third year, fourth year, and fifth year. But we have done all 5 years together so that it is simple. This n into n plus 1 by 2 is nothing but just formula. If you don't want to use this n into n plus 1 by 2, then what you'll do in the denominator is add 10 plus 9 plus, I will also do it this way. You can also do 10 plus 9 plus 8 plus 7 plus 6 divided by 10 plus 9 plus 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1. This way also you can do. Okay. This is also the other way of doing it. Finally, you will still get 40 by 55. Why are we taking only till 6? That question I can answer because it is only for 5 years. You will take only 5 digits. I've taken only 5 digits in the numerator because we are only calculating depreciation for 5 years. If suppose I have to calculate depreciation for 6 years, then I will add one more digit here. That's it. Accordingly, it will change. Okay. Now the next method is machine hour method. Okay. In this method, what happens is you will consider the machine hours used. Suppose the asset is machine, right? So machine, how are we going to count the usage of a machine? By the number of hours it is working, right? So how many hours did you use that machine, or how many hours did you actually put that machine into working condition and all that? So your depreciation can be calculated based on that machine hours also. So that's one way of calculating depreciation. Let us look at this question, illustration 4. So the machine purchased for 30 lakhs. Cost of the machine is 30 lakhs and have an estimated working of 24,000 hours. So if you see the difference between the previous questions that we have seen and this question, in the previous questions, what we had a useful life of 10 years or useful life of 5 years, 6 years, and so on. But here, they're not giving the useful life in years. They're giving you the useful life in hours, because few machines cannot be used for a longer period or cannot be estimated in the form of years. So they will tell you that the machine will work for maybe this many hours only. So if you have used this many hours early, it will expire early. If you are using it for a longer period, you will use it for 10 years, 20 years, and so on. So the useful life is not depending on the number of years. It is depending upon how many hours you are using the machinery, right? So here, how many hours is expected? This machinery can be used for 24,000 hours. Okay. And the scrap value is expected to be how much? 2 lakhs. And the anticipated pattern distribution of effective hours is as follows, which means in the first year, second year, and third years, I will use 3,000 hours per year. Which means first year I'll use 3,000, second year I'll use 3,000, and third year I will use 3,000 hours, right? And in the fourth, fifth, and sixth years, I will use 2,600 hours per year. And in 7 to 10 years, I will use 1,800 hours per year, which means I am distributing the 24,000 hours in 10 years. It can be different for different machineries. All the machineries will not work in the same way. The expected life of the machinery is 24,000 hours. How are you using that hours will depend on the organization, because few people want to use them faster. I want to produce more goods early. In the initial years itself, I'll use all the hours, machine hours. If that is done, then you will here, if you see, in the initial years, I've used more. And then moving forward, what happened? The usage has come down because machinery will be becoming obsolete, and it will start deteriorating, right? So the usage also will come down. Now what is required? They're asking you to calculate the annual depreciation under machine hour rate method. As per this machine hour rate method, what will be the depreciation? This is what they're asking, right? So illustration 4. Now, year-wise, they're asking you to calculate, and then you will have to calculate the annual depreciation. I have given the table here. So this is the statement of annual depreciation under which method? Machine hour rates method, right? Yes. So firstly, we have year 1 to 3. We have 1 to 3 given, and what is the usage in the first 3 years? It is 3,000 per year, correct? 3,000 per year is the usage. Now, yeah. So let us do the calculation. What is the usage in that first 3 years? 3,000. And what is the total number of hours that are available? 24,000. This is clear? So 3,000 is in the numerator, 24,000 is in the denominator. 3,000 is the usage in that particular year, and 24,000 is the total. This is nothing but we are trying to see on an average how many hours are we using. 3,000 is the usage in that particular year. 24,000 is the total number of hours the machine will be available. Correct? Now, we also have to take the cost of the asset. 30 lakhs is the cost of the asset, but we also have scrap value given, which means what will be the value for calculating this into 30 lakhs minus what is the scrap value? Calculate this value. Three lakh 50,000. Is that right? 3,50,000, is it right? Okay. Now try this next one. Next one is what? Here 4 to 6. Here 4 to 6, what will be the calculation? I am going to use 3 to 26,000, 2,600 by what is the total? 24,000 into 30 lakh minus 2 lakh. Calculate this also. Which is 3 lakh 3,333. Okay, got it. Next one is 7 to 10. Here 7 to 10, it is 1,800 divided by 24,000 into 30 lakhs minus 2 lakhs. What is the answer? 2,10,000. Okay. Are we clear with this? This is very simple. You just have to see what is the total number of hours, machine hours that are available, and what is the usage that we have done in that particular year. Yeah. I mean, the question was asked only about calculating the depreciation, so we are only calculating the depreciation. Here, they asked you to just determine the annual depreciation. They didn't ask you to present the machinery account or depreciation account, so we are not doing. Whatever is asked in the question only, we will present. You don't have to, write all the accounts again. Now, what is this 3,50,000? This 3,50,000 is nothing but annual depreciation, which means what? First year, second year, and third year, what will be the depreciation? 3,50,000 only. Am I clear with this? And in the fourth year, what is the depreciation? 3,03,333. This will continue for fifth and sixth years. Now, this will be same for 3 years. Seventh year, eighth, and 7, 8, 9, and 10 years, what will be the depreciation? 2,10,000. And this will continue. That is what means. Okay. This means that your depreciation, whatever you have calculated here, is annual depreciation, which means it will be the same for the next 2 or 3 years, whatever variation they have given. Here they have given 1 to 3, 4 to 6, and 7 to 10. The same will continue. That is annual depreciation. Because they told 3,000 hours are used for 1 year. So that is why we are taking that. I took only once because I hope I cleared your question, Chaitanya. That is what it means. I took only once because first year, second year, and third year, it is 3,000 only. Why do you have to do again 3 times? It's the same, no? You're doing for the first year, second year, and third year, it is the same. So I'm doing only once so that I know the depreciation for 1 year, which will continue for the next 2 years also. I hope I'm clear. I'll move on. Okay. So this question illustration 4 is done. The next one is production units. This also is almost the same. Almost the same. The difference, only difference in this question and the previous question is the units produced. In that previous question, what happened? We are deciding how to calculate depreciation based on the usage of the machinery. The machine is used for this many hours. Based on that, you have calculated depreciation. Here, what will happen? The machine is producing how many units in a year. So your depreciation is calculated based on that. Why this many methods? I think you can have that question. Why are we using this many methods? It is because all the machines will not run in the same way. Because it is used in production, what happens is each machine will have its own way of producing. You can't say the useful life is 10 years, or if you say useful life is 10 years also, you're using the machinery more in first initial years and less in the last years, right? So the company wants to provide depreciation also in the same way. If you are doing straight line method, what will happen? Your depreciation is same for all 10 years. But if you do it in this way, what happens? If you're following this production or whatever previously we have done, what will happen? You are providing more depreciation in the initial years and less in the coming years. It is because the usage is more initially. Obviously, the machines are mostly used in the year of purchase, and mostly when you have purchased it, you use them more because the functionality will be more when you have purchased. It will come down gradually when the machine is becoming older, right? So, providing more depreciation initially is what is the sense of these different methods that we have. Okay, this is also almost the same question wherein machine was purchased for 20 lakhs, expected useful life is 10 years, residual value is 2 lakhs, and the machine is expected to produce 1.5 lakh units. Entire life in 10 years, it can give you how many units? 1.5 lakh units. And how it is distributed? In the first 3 years, it will give you 20,000 units per year. 4 to 7, it is 15,000 units per year. And 8 to 10, it is 10,000 units per year, right? So they have distributed how many number of units it is going to give me per year. And I know what is the total, 1.5 lakh units. Can we do this question? It's again the same, almost the same question. We'll quickly finish this. Same, but it is production units method. You want to do this? I think some have given this. Ma'am, we want to do it on our own. You want to do it? I can leave it to you. If you can quickly tell me the answer, I'll wait for 2 to 3 minutes. Just tell me the annual depreciation. Do it yourself and quickly tell me the answer. So it is year 1 to 3. And what is the next breakup? 4 to 7 and 8 to 10. I need 3 depreciations. Quickly do this. I'll show you the question if you want. Yeah. Can you solve it or you want me to do? Many are already giving me the answer. Good. I almost got the answer. But I want others also to do. I'll just wait for 1 more minute. It's simple, so I'm not giving so much time. Did you remove the scrap value and then have calculated the depreciation? You have to remove the scrap value. Okay. Okay. Good. I'm writing the answer here. Most of you have given this answer, so I am thinking it is correct. 2,40,000 is the first one, and 4 to 7 it is 1,80,000. And then 8 to 10 it is 1,20,000. Did you all get this answer? Anyone who got different answer? Oh. One of you have asked why the expected production units is not matching to the expected distribution pattern of production. It will match. Why it is not matching? See, they told first 3 years it is 20,000 units per year, which means it is 20,000 into 3, no? Yes or no? They told first 1 to 3 it is 20,000 into 3, and 3 4 to 7 it is 15,000 into 4, and then 8 to 10 it will be yeah, 10,000. 10,000 into 3. I think this will match. This is 60,000, this is 60,000, and this is 30,000. It is 1,50,000, no? It is matching. They told 1,50,000 units. It will match. It will match. They just gave you per year. That's why it is not. It is looking like that. So I'm assuming everybody have finished this and everybody got this answer. I'm moving on to the next question. Okay, next one is the depletion method. Look at this question. This depletion method is mostly, for the a kind of mines that we have, or any minerals that are extracted. Mostly such kind of an assets we use this depletion method, wherein this is also almost the same, wherein it depends on how many minerals you're going to extract from a particular mine or from a quarry, how many how much production you're going to do, how many tons you're going to extract out of it. So the depreciation depends on that, right? So here the question is, this Mrs. Surya and Co have taken lease of a quarry on 1/1/2019 for 1 crore, right? As per technical estimate, the total quantity of mineral deposit is 2 lakh tons. So they're expecting that total minerals that are available in that quarry is 2 lakh tons, and depreciation was charged on the basis of depletion method. Now, how did they extract? The extraction pattern is given below. In the year 2019, they have extracted 2,000 tons. In 2020, they have extracted 10,000 tons. 2021, they have extracted 15,000 tons. Right? They're asking you to show the quarry lease account and depreciation account for each of the years 2019 and 2021. So before we do the machinery, I mean the lease account, quarry lease account, and the depreciation account, you'll have to first calculate what is the depreciation for 2019, 2020, and 2021. Do that first. Do that first. Then we will do the calculation. In the year 2019, what is the depreciation? 2020, what is the depreciation? 2021, what is the depreciation? I want this answer. This is again the same, so it's nothing new. However we have done before, the same way you will have to do this also. Total is 2 lakh tons. In 2019, it is 2,000. 2020, it is 10,000. 2021, it is 15,000. So tell me the answer. In 2019, it is okay, 1 lakh. Okay. 2020, it is how much? 5 lakhs. Okay. And 2021, it is 7,50,000. Okay. Did everyone get this? You can see the question. 2 lakhs is the total. And 2019 में it is 2000, 2020 में 10,000, 2021 में 15,000. Which means how will you do it? How will you do the calculation? 2,000 divided by 2 lakh into 1 crore, the cost of the asset. Right? And 10,000 divided by 2 lakh into 1 crore. And the last one is 15,000 divided by 2 lakh into 1 crore. I think you'll get the answer. We don't have scrap value in this question, no? There's no scrap value. That's why I've taken directly 1 crore. If there is a scrap value, then you will remove that and then on that you will calculate. Did everyone get this? Depreciation values, all the 3 depreciation years ka value. So the question here is to calculate the, draw the accounts. That is simple only. Try doing it. Try doing the quarry lease account and depreciation account. What will be the first one? What will be the first one in the account? You have purchased it on 1/1/2019 to 1/1/2019 to bank account 1 crore. Correct? Yes. And then 31st December 2019 by depreciation account, how much? You have just calculated in the working note, so you can take that figure directly. It is 1 lakh. Okay. 1 lakh. Next one is by balance carried down. How much is the balance that is carried down? 99, I think. 99 lakhs. Oh my God, very big number. And then 1/1/2020 to balance brought down 99 lakhs. And again 31st December 2020. You have by depreciation account and by balance carried. How much is the value? I think the second year depreciation is how much? 5 lakhs. 5 lakhs. And what is the balancing figure? 94 lakhs. Okay. 99 lakhs. 99 lakhs. One 2021 to balance brought down 94 lakhs and 31st December 2021 by depreciation account. How much is the third year depreciation? We have calculated 750. Okay. 7,50,000 and by balance carried down. How much is the balance? 86,50,000. Okay. 94 lakhs. 94 lakhs. Then on 1/1/2022 to balance brought down 86,50,000. We don't have the next year depreciation. We are stopping here, right? We are asked only to calculate till 2021, so we have done it. So this quarry lease account is done. It is nothing but you have purchased the asset that will go into debit. You provide depreciation every year, that is every year credit, and then balancing figure. That's it. And depreciation account is so very simple. 31st December 2019, you'll have two quarry lease account. 31st December 2019, you have by P&L. I think first year it was 1 lakh. No balance carried down or brought down in depreciation accounts. It is because it is a expenditure account. I told us before also. Okay. 31st December 2020, two quarry lease account, 5 lakhs. 31st December 2020 by P&L account, 5 lakhs. Then 1st December 2021, two quarry lease account, 7,50,000, and 31st December 2021 by P&L account, 7,50,000. Are we done? Okay, and move on. Any questions still here? Any questions still here? So in this questions that we have done, we did one question was about straight line method. One we have done WDV. The other one was sum of digits method. Then we did machine hours method. Then we did production units method. Then we did depletion method. So I think we almost have covered 5 to 6 methods. And I like I told you, each one will depend. When are you using this method will depend upon what kind of a machinery you are using or what kind of an asset it is. Like these mines, quarries, and all, you can't use that kind of a useful life. You will mostly depend upon the number of minerals that are extracted or number of quantity that is extracted. And few assets you will have to definitely use how many units they're producing or how many hours you are using that machinery. So that will make all the difference, right? Hmm. The next part is about the profit or loss on sale of disposal. I'll pause here because this is again a different sale and disposal. Till now, we have done all the depreciation methods. From here, we will have to see if there is any sale or if you have any change in the depreciation methods or if you have done any revaluation, how it works and all. So quickly take just 5 minutes break and then we'll be back and continue all this part. Okay. Technical team, I'll pause for 5 minutes. Take a break. Okay. Are you all back? Can we start? Okay. So the next one is about the profit or loss on sale of disposal. So what is the profit or loss on sale of disposal? Now, assuming we have purchased a machinery for 1 lakh and useful life is 5 years. Okay. So what is the depreciation? 1 lakh divided by 5, which is nothing but 20,000. Correct? Assume that there is no scrap value. I'm assuming there is no scrap value. So depreciation is 20,000. Now, the useful life is 5 years, but it is not needed that, or it is not compulsory that you will have to use that asset for 5 years. In between, you can sell it. Right, you might sell it after 1 or 2 years, right? Now, in this example, let us assume after 3 years, I sold this machinery for 75,000. So the assumption is that after 3 years, the machine is sold for 75,000, correct? Okay. Now you are going to calculate whether it is a profit or loss on sale of disposal. How will you do that? After 3 years means 3 years depreciation have to be calculated. So cost is 1 lakh. I hope everybody is here. Depreciation for the first year is 20,000. This will give me 80,000, correct? And depreciation for second year is 20,000. That will give me 60,000, correct? And then I will also remove depreciation for third year, which is 20,000. Now, what is the carrying value that is left with me? 40,000. 40,000 is the value that is left with me after 3 years, right? Now, this is the value, carrying value. And what is the value? Sale proceeds. Sale proceeds is how much? It is 75,000. We told that it is sold for 75,000, which means it is a profit or loss. It is profit or loss. 40,000 is the value you have in your books of accounts and you sold it for 75,000. It is profit or loss? It's definitely profit, no? Because you sold it for more value. So what is the profit here? 35,000. So this is called profit on disposal. Disposal means what? When you're disposing of the asset, it is called, I mean, like a sale. You remove that asset from your books of accounts, right? So this is profit. Let us assume the machinery is sold for 20,000. The machinery is sold for, okay, maybe this was 75,000, so you have a profit. One more example is that you have carrying value of 40,000 only and it is sold for 20,000. Then it is 20,000 loss on disposal. This is clear, profit or loss on disposal. So you are comparing the sale proceeds with only the carrying value. That is more important. What most of the people make mistake is you will compare the 75,000, the sale proceed, with the cost of the asset. Can you compare 1 lakh and 75,000? No. Because after 3 years, the value of the asset is no more 1 lakh. What is the value after 3 years? It is only 40,000. So you have to compare the carrying value and the sale proceeds only. This is the most important thing you will have to remember when you're calculating the profit or loss on sale of disposal. Correct? Clear? Now let us do this problem. Illustration 7. Yes, look at this illustration 7. So a firm has purchased on 1st January 2020 certain machinery for 5,82,000 and they have spent 18,000 on its erection, almost like the installation only. And on July 1st, 2020, another machine was purchased for 2 lakhs. Another machine was acquired, which is almost like a purchase. It was done on 1st July 2020. Okay. On 1st July 2021, the machinery purchased on 1st January 2020, which means the initial machinery which was purchased, this one, having become obsolete, was auctioned for 3 lakh 86, which means the first machine one which was purchased was sold in the year 2021 for 3 lakh 86,000. And on the same day, what did we do? We have purchased a fresh machinery for 4 lakhs. So once the machine was sold, on the same day you purchased one more machine, right? Correct. Now, what is given? Depreciation was provided for annually on 31st December at 10% per annum on return down value method. It is not straight line, it is return down value method. They're asking you to prepare the machinery account. Okay. With the machinery account only, you will have to do the working note also, because for calculating the depreciation you will need the working note, and also for calculating the profit or loss on disposal and all that you will need the working note. So we will do machinery account along with the working. Okay, so if you have to start the machinery account, what will you start with? Obsolete means it is nothing but your machine is no more in a usable condition, or the technology has changed, that the machine is not in such a condition that it is going to work for your organization. That is called obsolete, right? Yeah. So what is the first one? You have to start with what? You have purchased the machinery, correct? So that is what you will have to start with. So it will be debit or credit. Please respond, be with me so that we can finish it. Respond. Debit side, what are we going to write on debit side? Debit what? This 2020. To bank account, what is the value? 5,82,000. Okay. And also to bank account, the erection charges also have to be recorded. No, what are the erection charges we have? 18,000. 18,000. Done. Yes. And what is the next one? Yes, the total cost of the asset will be 5,82,000 plus 18,000. Right. The next one will be to provide depreciation. So it will be done on 31st December 2020 by depreciation account. What is the value of depreciation? How much will be the depreciation? For this, I am going to do this table. It is easy only for the first year, but still I'm doing the table so that it will be easy for all the other machineries also, because we have 2-3 machines purchased, no? So that is why I'm doing this table. Okay. So what is the cost of the machine here? 6 lakh. Depreciation at the rate 10%, 60,000. This depreciation is for 2020. Okay. Now the WDV will be 5,40,000. Is this clear? So what is the depreciation amount here? 60,000. This is done. I have taken the purchase on the debit side and I have calculated depreciation for 1 year and then recorded it. Now what else will come up? By balancing figure carried down. What is the balancing figure? 6 lakh. Balancing figure is how much? 1,40,000. So on 1/1/2021, to balance brought down will be 5,40,000. Okay. Now let us go back to the question again. Okay, there's one more machine purchased. Okay, I've got it. It was purchased on 1st July. I am so sorry. I think this value will be wrong there. There is one more machine that is purchased in the middle of the year after 6 months. What is the cost of that machine? 2 lakhs. I have to take that also, no? Right? And by depreciation, you can write this separately or you can add it also there. It is fine. The cost of the machine is 2 lakhs and depreciation is 10%. But can you take the entire depreciation? You can't take because it was purchased in the middle of the year. You will only have to take it for 6 months, right? So how much will be the depreciation here? 2 lakh into 10% into 6 by 12, 10,000. Okay. So what is the carrying value? 1,90,000. Why it is 10,000? I hope everybody is clear because we are only providing depreciation for 6 months because it is purchased on 1st July. This will be 70,000. You can write it here 60,000 plus 10,000. Now, 31st December 2020 by balance carried down. How much is the balance carried down? 7,30,000, is that right? Okay. 7,30,000. Total is 8 lakhs. On 1/1/2021, to balance brought down will be 7,30,000. Right? Till here clear? So next year what happened? I am going back to the question again. So we have finished it till here, correct? You have recorded 2 machines. One was on 1st January, the other one was on 1st July, same year. Now on 1st July 2021, the machine purchased, the first machine which was purchased was obsolete and it was sold for 3,86,000. Okay. And on the same day, you purchased one more machine also. So let us first do this. On 1st July 2021, you have purchased a new machine which is to bank account. What is the value of that new machine? 4 lakhs. On 1st July 2021, you will have to first provide depreciation. Okay, this depreciation will be provided for which machinery? The first machinery, whatever was obsolete. They told that machine one was obsolete, right? Here, if you see, this machine was obsolete. So for this machine, you will have to provide depreciation for 6 months. Why are we providing depreciation for 6 months? Because it was sold on 1st July. Till 31st December 2020, you have already provided depreciation. After 31st December, it is also there for 6 more months. So for 6 more months, you will have to provide depreciation and then sell it, correct? So providing depreciation 2021 May, depreciation at the rate 10% again. How much is the depreciation? 27,000, okay. I'll show the calculation if you want. 5,40,000 into 10% into 6 by 12, okay. Now what is the carrying value or WDV of this machinery? What is the WDV? Please calculate that now. 5,13,000. Okay. 5,13,000. WDV is done. Correct. Now what we are going to do? You have provided depreciation, and after depreciation, this is the value. And you have sold it for how much? Sale proceeds is how much? They told we have sold it for, going back to the question, we sold it for 3,86,000. It is given in the question. So 3,86,000 is the sale proceed. So whether it is profit or loss, on disposal. How much is the loss? Okay, 1,27,000. Is this clear, everyone? You can't calculate the loss on disposal with the cost of the asset of 6 lakhs. 6 lakhs cannot be compared. You have to compare it with the WDV. What is the date of the sale? On that date, what is the carrying value or written down value you have in your books of accounts? That has to be compared with the sale proceeds to get your profit or loss on disposal. I hope this is clear. Yes? Okay. Now let us come back to the machinery account. In this machinery account, what is the depreciation you have to provide on 1st July? It will be only 6 months ka depreciation, which is 27,000. I have provided 27,000 depreciation, which is a depreciation of the first machinery, which has become obsolete and which we are selling. So that is sold. So you have provided depreciation, and when it is sold, you will receive some sale proceeds that will be coming up in bank. That amount also have to be recorded on the credit side. Why is it coming on the credit side? Why is this amount coming on the credit side? Proceeds. Anyone? Why is it on the credit side? Because you have received that amount. It is received. That is why it is coming on the credit side. 3,86,000 is paid by someone to you, that I am purchasing this machine from you, and then I will give you some amount, right? So for the organization, for the company, it is a receipt. That is why I'm showing it on the credit side by bank account. Clear? 3,86,000 is also recorded. Now, one more thing you have to record here is on this date by P&L account. The loss that we have. What is the loss? 1,27,000. Profit or loss, whatever you have to be recorded. This P&L account 1,27,000 is nothing but the loss that we have. Okay. This is clear till here. I have recorded the depreciation, I have recorded the sale proceeds, and I have recorded the profit or loss on disposal. Since it is loss, it is coming on the credit side. If it is profit, it will come on the debit side. That part is clear. Okay. Now this is done. This is on 1st July 2021, right? Now on 1st July 2021 only you purchased one more machinery for 4 lakhs, right? This is also recorded. Done. Now on 31st December, what will happen now? 31st December 2021, you have to record depreciation for 1 year. By depreciation account, we will record how much will be the depreciation. Let us go back to this. Now 1,90,000 is the carrying value, and depreciation on this will be 19,000. Calculate the value. Calculate the carrying WDV. 171. Okay. 1,71,000. Now you have one more machinery which was purchased on 1st July for 4 lakhs, right? It was purchased on 1st July, which is 4 lakhs. And depreciation on that will be 4 lakh into 10% into 6 by 12 only for 6 months again. Why? Because it was purchased on 1st July, 6 months. So it is 20,000. The carrying value will be 3,80,000. So depreciation for 2021. What is the depreciation for 2021? How much should you take here? 39,000. Why? 19,000 plus 20,000. Machine 2 and machine 3. Machine 1 is no more there, so I'm not providing depreciation on machine 1 here. Are we clear? We are only providing depreciation of machine 2 and machine 3. Machine 1 ka depreciation is already provided here, and we have sold it also, so it is closed. So only machine 2 and 3 ka depreciations have to be provided here. I hope this is clear. Calculate the balancing figure on 31st December 2021 by balance carried down. How much is the balance? Five lakh 51,000. Okay. So on 1/1/2022, to balance brought down will be 5,51,000. This part here, everyone. This part is clear. So in this question, what happened? You had different machines purchased in different time slots, but calculating the depreciation appropriately is more important. You provide depreciation for 6 months or 1 year, depends on how many you have used the machinery for, right? 6 months or 1 year. And then when you're actually, this part is very important in this question. I think this is the new part that we have done, wherein when you have sold the machinery, it has to be the depreciation on that has to be provided till the date of disposal. Then whatever sale proceeds are there, that has to be recorded, and profit or loss on that also have to be recorded separately. Once that is done, you will know the balancing figure in that machinery account. I'll move on then. Clear, I'll move on. This is done. Most of you had question on this provision for depreciation and all. I think this question will solve all that. When you have the provision for depreciation account, how will you record? And when you don't, have provision for depreciation account, how will you record? Will be shown in this question. Let us do this question. I think if you do this, almost you'll be clear of how provision for depreciation account will work, and if that is not there, how it will work. Okay, just look at this question. This is again important, little important. Let us do this. So on 1st April 2019, what do we have? Shubhra Limited has purchased a machinery for 12 lakhs. And on 1st October, a part of the machinery purchased on April 1st, 2019 for 80,000 was sold for 45,000, which means entire machinery not sold. Only a part of it was sold. Out of the 12 lakh, 80,000 costing machinery was sold for 45,000. And they also purchased a new one at 1,58,000. New machinery was also purchased on the same date and installed on the same date. Okay. The company has adopted the method of providing depreciation, 10% depreciation on WDV, written down value method. Okay. They're asking you to show the necessary ledger accounts for the years 31st March 2020 to 2022, which means 2020, 2021, and 2022. 3 years ka accounting have to be shown, ledger accounts, assuming that provision for depreciation account is not maintained. In the first case, it is not maintained, and in the second case, provision for depreciation is maintained. So if you remember there were two different accounting treatments we have discussed yesterday. If provision for depreciation account is maintained, we had a different journal entry. If it is not maintained, we had a different journal entry, right? So we are going to do both of them in this question so that we are clear of how the depreciation accounts will work. Okay, let us start. Okay, so the first one, the machine is purchased for 12 lakhs. So on on 1/4/2019 to bank account 12. Asset is purchased for 12 lakhs. We have recorded that. And then next one, what happened? In that 2019 and 2020, we didn't sell. So you can continue providing depreciation. So on 31st March 2020, by depreciation account. How much is the depreciation? 120, 1,20,000. Okay. By balance down 10,80,000. Okay. This is simple. On 1/4/2020, to balance brought down will be 10,80,000. Correct? I'm also doing the depreciation account along with this. In depreciation account, what will be coming up? 31st March 2020 to machinery account 1,20,000, and 31st March 2020 by P&L account 1,20,000. And we will close 1,20,000 because this has been transferred to P&L statement. We will have to close this account. This is okay. We just have provided depreciation for 1 year and then calculated what is the balancing figure. Now the next one. When was this sold? When was that part machine sold? It was sold in the year 2021. So next year also, no worries. You can calculate the depreciation as it is, right? So do that also. 31st March 2021 by depreciation account be 1,08,000 because it is told that it WDV 10%. So the depreciation will not be same every year. By balance carried down will be 9,72,000. Okay. 10,80,000 and 10,80,000. So on 1/4/2021, balance brought down will be 9,72,000. Also finish the depreciation account. 31st March 2021 to machinery account 1,08,000. 31st March 2021 by P&L account 1,08,000. Are we done? They asked us to do it for 2020 and 2021, 2022 also. Now till 2021 we have finished. Let us do 2020 1 and 2 now. Here comes the twist wherein some asset was sold and it was sold for a different value, and then one more machinery was purchased and all these things happened. So let us consider now what is the cost of the machine sold 80,000 and it was sold for 45,000, right? Now, can we compare these two? Can we compare 80,000 and 45,000 and say that the loss on the machinery was 35,000? Can I say that? Yes or no? You understood my question? The cost of the machine is 80,000 and it is sold for 45. Can I compare these two figures and say it is a loss of 35,000? Yes or no? Can I say that? No, definitely no. Why? It is because I told you clearly cost and the sale value, sale proceeds cannot be compared. Carrying value and the sale proceeds have to be compared for sure, right? So, for that, we are going to do the working note. What is the cost of the machinery which is being sold? They told only 80,000 part of the machinery is being sold. So, I'm taking that minus depreciation for 2020 was how much? If you take 10% on this, it will be 8,000. 10%. Then WDV will be 72,000 if I'm not wrong. Yes or no? 72,000? Then minus depreciation for 2021 will be again 10%. So 7,200. Then WDV will be how much? Calculate the WDV for this. $64,800, okay. Minus, I'm doing depreciation for 2022. I will only have to do this for 6 months. Why only 6 months? Because in 2022 year, it was sold in between, right? It was sold on 1st October 2021, which means April, May, June, July, August, September. It was only there for 6 months. So 6 months depreciation have to be calculated for 6 months. How much it is? 3240. Okay. So what is the WDV? Sixty-one five sixty. Okay. 61,560 is the WDV. Now this has to be compared to sale profits. What is the sale profits? They told that we sold it for 45,000. Now is it a profit or loss? Tell me. Is it a profit or loss? Loss, how much? 16,560. Okay. Is everyone clear with this? How we have calculated the loss on disposal? 16,560. So I have almost taken the depreciation for 2.5 years. You can directly take that 2.5 years ka depreciation, but to be very clear, I have written it separately so that you're not confused what is happening. Why did we take 2.5 years? Karke? Few people will have confusion, so I've taken it this way. Okay, this is now what has to come in your machinery account. I told you when there is any sale proceeds, you have to take the depreciation, you have to take the sale proceeds, you have to take profit, you have to take the profit or loss. When did we do the sale? What was the date? October. 1st October 2021. So you have to take by depreciation account. How much is depreciation? Only for 6 months because already the first 2 years ka depreciation is done. That is why I've done this separately also. That is one reason, right? Then by bank account, the sale proceeds is 45,000, and then by P&L account, The loss is 16,560. All these three have to be returned. Are we clear with this? This is done. Okay. So on 1st October, it is done. We have, sold a machinery. We got some value of disposal and all that. Now, on the same date, they told something else also happened. What is that? They told that on the same day, you purchased one more machinery, which is costing 1,58,000, right? So this has to be recorded, which is on 1/10/2021 to bank account. What is the new cost of the machinery? 1,58,000. 1,58,000. That's now let us go to year end. 31st March 2022 by depreciation account. Okay. How much will be the depreciation now? You have how many machines now? You have the older machine which was there and part of it was sold, and you also have a new machine. There are two types of machines here now, right? The one which was purchased on 1st October, the one which was purchased 3 years back. So all these you will have to provide depreciation. Total depreciation have to be calculated. So depreciation on old machine is how much? Old machine ka WDV is how much? First of all, WDV of old machine is 9,72,000. Out of this, what was the WDV of the machine that was sold? The WDV of the machine that was sold was 64,800. So on this, you will have to provide depreciation. On this, 10%. This is clear how I am calculating the depreciation for old machinery. In old machinery, the carrying value is 9,72,000. But a part of that machinery was sold. Na? What is the part of that machinery which was sold? The carrying value of that is 6,800. We have calculated here also. So I'm taking that into 10% will be depreciation on the old machinery. How much is this value? 90,720. Okay. But you also have a new machine. So depreciation on new machine have to be calculated. What is the value of new machine? We have written here. To bank, we wrote 1,58,000, right? So 1,58,000 into 10%. Again, this has to be calculated for 6 months only. Why only 6 months? Because it was purchased on 1st October. So only for 6 months. What is the depreciation? 7,900. Okay. So what is the total depreciation? 98,620. Okay. Is this clear, everyone? How new and old machine ka depreciations we have calculated? Old machine and new machine. So what is the depreciation you have to show here? 98,620. If this is done, then you will have to record what? By balance carried down. What is the balance carried down? 966,580. Okay. Did everyone get this answer? 966,580. On 1/4/2022, true balance brought down will be 966,580. Any questions in this? Any questions in this? So this method or this kind of accounting is done when you are actually not maintaining provision for depreciation account separately, right? In this, we have recorded the normal depreciation for 2 years, and after in the third year you sold that machinery, so that is recorded. You have purchased one more machinery, that is also recorded, and depreciation for old one, new one, everything have to be calculated, and then we are doing this machinery account. I hope this is clear. I closed this account also in 2022, 110, 2021, sorry. Two machinery. How much is the depreciation we have? 3240. 3240. And on 31st March 2022, we have again two machinery. How much is the depreciation? 98620. So 31st March 2022, by P&L account, how much is transferred? How much is transferred to P&L statement? Total. This 3240 is for the sold machinery and 98620 is for the old and the new one, both together. So to P&L statement, 101860. Okay. Done here. Now let us do this provision for depreciation. This will be a little different, wherein how to provide for or how to record when provision for depreciation account is maintained. Okay, let us do this also. This will be almost similar, but a little difference will be there. So when machinery account is maintained and provision for depreciation account is maintained, you will also have to maintain this machinery disposal account, right? How this will work, let's see that. So on 1st April 2019, you have purchased two bank account. I'll write it fast because since we have done this already, 12 lakhs will be the cost of the machine, right? So on 31st March 2020, you'll have buy balance carried down 12 lakhs. Okay. There is no other entry that will be returned. We will only record the cost of the asset, right? Next, what will happen on 1/4/2020, you'll have two balance brought down of 12 lakhs. And then 31st March 2021, you'll have buy balance carried down of 12 lakhs again. Okay. Cost is only carried forwarded. There is no other entry that should be recorded, right? Next, what will happen? 1/4/2021, two balance brought down 12 lakhs. But something else happened in 2021, right? So on 1/10/2021, what happened? We sold a part of the machinery, right? So you will write buy machinery disposal account. This is the new entry that we're going to make. Machinery disposal account of how much? 80,000. Cost of that machinery which is sold have to be recorded, because now in this machinery account you're not recording depreciation, you will only record cost. So when you have sold something, the cost of that only will be removed here. I am removing 80,000 here because this is the cost of the machinery. Okay, this is done. Now on 1st October 2021, you have also purchased one more asset, one more machinery, which is costing 1,58,000. So on 31st March 2022, buy balance carried down will be how much? Quickly calculate this. $12,78,000. Okay. This is clear? This is clear? So what did we do in this machinery account? If provision for depreciation is account is maintained, in machinery account, only costs have to be recorded. Whatever it might be, only cost will be recorded in that, right? Now let us move to this provision for depreciation account. In this provision for depreciation, what will happen? You will record all the depreciations in this. You will not record it in the machinery account. All the depreciations, whatever we have calculated, will be recorded here. Okay. So first depreciation will on 31st March 2020 by depreciation account. I think the first depreciation was 1,20,000. So 31st March 2020 to balance carried down will be 1,20,000. Okay. Now again on 31st March 2021 by depreciation account, which will be 1,08,000. The second depreciation was 1,08,000. 31st March 2021 to balance carried down. One for 2020 by balance brought down 1,20,000. So what is the balancing figure? This provision for depreciation account, what is happening in this provision for depreciation account? All the depreciations for all the years is accumulated. First year the depreciation was 120. We had a balance that we will take it forward to the next year, and next year's depreciation is also added to it, and that is carry forwarded to the next year. So what is the total we have? 2,28,000. This is clear. Now next one is 31st March 2020 1 for 2021, and this is 31st December 2021. Okay. By balance brought down 2,28,000. You have brought 2,28,000 balancing figure from the last year, right? And now, if you remember, in the middle of the year, we sold a machinery, right? So 2021 to machinery disposal account again. Disposal account. You will have to send the depreciation of the particular machinery that we have sold to the machinery disposal account. And what is the depreciation of this machinery that is sold? Let us go back to the working note. Look here. You'll have to provide the entire depreciation for all the 3 years. How much is the depreciation? First year it was 8,000. Second year it was 7,200. Third year it was 3,240. So all these three together you will have to close it, right? This will be how much? 8,000 plus 7,200 plus 3,240. How much is the total? 18,440. Okay. 18,440 is transferred. So if you understood what we are trying to do here, in machinery account, 80,000 cost was transferred to machinery disposal account, and in provision for depreciation account, total depreciation was transferred to the machinery disposal account. So when some machinery is sold in between, the cost will come from machinery account, depreciation will come from provision for depreciation account. That difference you're going to note in this example, right? Now this is done. What else is there? We have to provide depreciation by depreciation account. Then on 1/10/2021 by depreciation 3,240. This is a depreciation for 6 months, because for first year depreciation, second year depreciation is already provided. Half year ka depreciation you will provide first and then transfer to the machinery disposal account. This is also done. Now on year end date 31st March 2022 by depreciation This will be how much the total depreciation that we have calculated for the new and old machinery, which is 98,620. We have done it in working note 2. 98,620. Okay. Now calculate the balancing figure. March 31st, 2022 to balance carried down. What is the balance carried down? 311,420. Are we clear with this? So when provision for depreciation account is separately maintained, in machinery only cost have to be recorded, and in all the depreciations will be accumulated. First year depreciation, this is second year depreciation, this is third year depreciation. So everything will be coming up and it is accumulated in the provision for depreciation account. I hope this is clear. We'll do it. Garvit will do that in the disposal account. Don't worry, we'll do that. Yeah, we will do it. Machinery disposal account is there. No, let us finish this also. Okay. Now, in this machinery disposal account, what have to be recorded? One is coming from this machinery account. 80,000 cost has to come from here, and depreciation will come from here. Both will be recorded in this account, right? So on 110, whenever is the date of sale, 2021, to machinery. From machinery account, how much did we get transferred? 80,000. And on the same date, 110/2021, by provision for depreciation account, how much did we get? What is the value? 18,440. Are you all there with me? 18,440. So from two different accounts, you got two different values. One was cost and the other one was depreciation, right? The cost is coming from machinery account. Depreciation is coming from provision for depreciation account on the same day. Both are done. Now, what else we have to do? I have to record the on 2021. I have to record this sale proceeds also. So by bank account, the sale proceeds, you sold it for 45,000, and also you have to record the profit or loss. It is loss, no? To buy P&L account. What is the loss that we had? 16,560. This also will be recorded. Hence, the account will be closed. This is clear. So when you are maintaining the provision for depreciation account, machinery account will only have cost. Provision for depreciation will account will have all the accumulated depreciations for all the years. And when you are selling some asset in between, that cost and the depreciation have to be transferred to a separate account, which is machinery disposal account. And then sale proceeds and profit or loss also will be recorded in the same account, and that account is closed. Once the sale is done, that account is closed. Am I clear? This is how you will have to record if a provision for depreciation account is maintained separately. Otherwise, you will do it this way, like we have done previously. Everything will go into machinery account. Depreciation will go, sale proceeds will go, profit or loss, everything will go into one account if provision for depreciation is not maintained. If it is maintained, then it will be done differently. Clear? Now, I'm not doing the 9th one, illustration 9. It is because it's almost the same. Illustration 9, if you look at this, it is the same thing. They will give you different machines purchased and a machine is sold. So you will have to do it in the same way by recording the machinery account and the disposal account. Try this. I'll move to the next topic, which is changing the method of depreciation. Okay. Suppose you're changing the method of depreciation, how it is going to work, which means I was following WDV. I want to change it to, the SLM, or I was following SLM. I want to change it to WDV. Then how it will work? What will happen if you're changing the method is till today, suppose I have purchased the machinery for 10 years, useful life is 10 years. After 4 years, I thought that I will change the method of depreciation. Then from the 5th year, you will start changing it, which means it is a prospective effect only. It is not retrospective effect. You will not go back and change the previous year's depreciation. Only the current year from today. If you are changing the method today, from today you will have to change the amount of depreciation. Otherwise, the previous year's depreciations cannot be changed. Okay, let us look at this question. Now, Anshul has commenced business on 1st January 2017, and when they purchased plant and equipment for 7 lakhs. They adopted the policy of charging depreciation at 15% per annum on diminishing balance method, which means they wanted to follow 15% WD. And over the years, their purchase of plant have been. So first plant was purchased on 1st January 2017 for 7 lakhs. Next, they have purchased on 1/1/2018 for 1 lakh 50. Then again on 2021, they have purchased for 2 lakhs. So there are 3 different machines here, correct? And now on 1st January 2021, it was decided to change the method and the rate of depreciation to straight line. So since it was WDV, they wanted to move to straight line basis now. On this date, remaining useful life was assessed at 6 years for all the assets purchased before 2021 with no scrap value, and 10 years for the asset which was purchased from 2020. So only for this asset, the useful life is 10 years. For the asset which was purchased on 17 and 18, the useful life is expected to be 6 years, right? When they have decided to change it. They're asking you to calculate the difference in depreciation to be adjusted in plant and equipment account for the year ending 31st December 2021. Okay, let us do this question. I'll do the working note first, then we will see how plant and equipment account is almost same, like how you record depreciation and all. This is the main part, how the depreciation is going to change. Now, firstly, it was into 2017. In 2017, you have purchased cost. Cost of the machine. How much? Was 7 lakhs, correct? So record that 7 lakhs minus depreciation at the rate 15%. How much is the depreciation? Calculate the depreciation quickly. Is 1,05,000, okay? What is the WDV? Five lakh 95,000. Okay. Correct. Next. In 2018, there was one more machine purchased, right? What is the cost of that machine? It is 1,50,000. It is 1,50,000. Okay. And minus depreciation at the rate 15%. Calculate the depreciation for both the machines. Calculate it for both the machines. First machine is 89,250. Okay. Second machine is 22,500. Okay, got it. And WDV? Tell me the WDV also. Okay. 505750 and 127,500. Okay, got it. So here the depreciation in 2017 was only 1,05,000, but in 2018 the depreciation was 89,250 plus 22,500. What is the total depreciation? Well, 1,750. Okay, got it. Now 2019. 2019, did we purchase any machine? Any information is given to you that we have purchased some machine? No. One machine was purchased in 2017. We have recorded that. This is the 17 ka purchased machine. And 18, we have purchased one more. This we have recorded. In 2019, there was no purchase. So directly we can provide depreciation. So depreciation will be at the rate 15%. Calculate the depreciation and then WDV. Machine 1 was 75,863. Okay. Machine 2 is 1912. Okay. And WDV also. WDV is 429,887. Okay. And 108,375. Okay. And what is the total depreciation? 75,863 plus 1912. 9499. Got it. Then, now in 2020, do we have any machine purchased? No. So again, it will continue. The depreciation has to continue. Calculate the depreciation for 2020 also. And WDV. Six double 484. Okay. And 16256. Okay. Plus 162. WDVs. WDVs 365,404. Okay. And 922,119. Got it. Okay. Thank you. So here till here we didn't do anything. If you look at this, we have just calculated the depreciation for all the years for the two different machines we have purchased. But in 2021, what happened is they have decided to change the method of depreciation from WDV to straight line method, which means from here you can't do into 15%. You will have to take the depreciation as 6 years, which means depreciation from here will be at the rate 6 years, which means how will you calculate depreciation here? 3,65,404, which is the carrying value we had till that date, divided by 6. Okay, this is how you'll calculate. And here 92,119 divided by 6. So what are we trying to do? After the, on a particular date, if you have decided that we are going to change the method, on that date, whenever you have decided, you will completely change it with the carrying value that is available on that particular date. So what is the depreciation now in 2021? It will be the carrying value divided by the number of years expected. So machine 1 it is 60,900 and machine 2 it is 1535. What is the total? 60,900 plus 1535. 76,253. I hope this is clear. Till 2020, we have used what? WDV. On the written down value, you have calculated 15%, 15%, and so on. But from 2021, since you have changed, you will change the way you are calculating by because they told the expected useful life is 6 years. We have taken divided by 6. I hope that is clear. But they told that for the new machine, what is the cost of the new machine? What is the cost of the new machine we have purchased on 1/1? It is 2 lakhs. This was 2 lakhs. And for this machinery, useful life is how much? 10 years. They clearly told it is 10 years. Can you see that? On 1/1, you have purchased a machinery which is costing you 2 lakhs and the expected useful life is 10 years. So what will be the depreciation of this particular asset? What will be the depreciation of this particular asset? 2 lakh divided by 10, which is 20,000. Am I clear? Am I clear? This is the machine which was purchased on 1st January 2021. And these two are the machines which are purchased on 17 and 18. Clear? So how will you do this plant and equipment account? Very simply, 31st March, what current date? December, I think, yes. 31st December 2021 by depreciation account, correct? On 1/1/2021, you will bring back the balance brought down and by balance carried down. And you will also have to write to bank account, which is the purchased new one. New asset is purchased. Take this also. And what was the balancing figure that we had? What is the total of this? Tell me the total of these two. The WDV that was available to us before changing the method of depreciation. Okay. So before changing the method of depreciation, our balancing figure was 457523. Okay. And then new machine was purchased. Now, what is the depreciation? Depreciation for two machines is 60,900 plus 152,353, which is 76,253. And the new machine is 20,000. So both these have to be taken. 76,253. 76,253 plus 20, which is nothing but 96,253. So what is the balancing figure? Quickly tell me the balancing figure also. 561,270. Okay. To balance brought down will be 561,270. This will be on 1/1/2022. I hope I'm clear. So this question, how did this 457 523 have come? It is the WDV value of both the machines. This one, these two together. WDV till 2020, how much is the WDV you have? These two together we have taken in the balancing figure. We in this account we didn't do for all the years. From 2017 we didn't start. If you start from 2017, it will be like a big account. We are only doing it for 2021. So I've directly taken the closing balance here. Okay. Now look at this question, illustration 11. This is also a simple one. So if you look at this question given here, if you are revising estimated useful life. Now, what if the method is changing from today? Whatever method you have changed, you will continue the depreciation from that method, right? If suppose the estimated useful life has changed, how will it react? The cost of the machine here is 6 lakh is depreciated on straight line basis, assuming 10 years working life and no residual value. So depreciation was provided for 3 years. Estimated useful life is how much? 10 years, but you have already provided depreciation for 3 years. Now, from today, after 3 years depreciation is provided, from today you are estimating that there is only 5 more years of useful life, correct? So what will be the depreciation of the 4th year is what they're asking. What is the cost of the machine? What is the cost of the machine? 6 lakh. Useful life is how much? 10 years. So depreciation for 1 year will be how much? 6 lakh divided by 10, which is 60,000. Correct? And they told that already depreciation for 3 years is provided. So how many years? For 3 years will be how much? 3 years depreciation will be 1,80,000. Okay? Right. Now, cost is 6 lakh minus for 3 years is 1,80,000. So what is the carrying value that is there? What is the carrying value we have? ₹4,20,000. Okay. 4,20,000 is the carrying value, which means after providing 3 years ka depreciation, today you have a value of 4,20,000. And generally speaking, you still have remaining useful life of how many years? 7 years. But then they are assuming that we can only use this machine for next 5 more years. So revised useful life is how much? Only 5 years, which means whatever is the carrying value you have, this has to be reassured, which means depreciation for 4th year will be how much? 4,20,000 divided by 5 only. Okay. So if you are revising the useful life, whenever you are revising on that particular date, you will have to see what is the new depreciation. So how much is the depreciation here? 84,000. So from 4th year and onwards, from that day and onwards, you will start providing depreciation for 84,000. Previously, it was 60,000, but from this year, you will start providing 84,000 because you have revised the useful life, right? Previously, it was 10 years, but after 3 years, you realize that it is still having only 5 more years. So the revised depreciation is 84,000. This is clear? Now, the same thing goes with revaluation also. Look at this revaluation ka problem. Suppose you
Ma'am, sorry to bother you, because we are running short of time. You have your class on Wednesday also, na?
No, ma'am. I think depreciation we will have to close today itself.
Okay, okay. Then
Yeah.
you can
So
go ahead. Yes, yes, yes.
shall I go ahead?
Yeah.
I think 10 more minutes we can finish. Is it fine?
Um. Okay, ma'am. Okay.
Because there are 2-3 problems which are very small, so I can finish.
Yes. So please,
Sure.
students, please be patient. Listen to the class. It'll take 10 more minutes only. Okay?
10 more minutes. Yeah.
Yeah.
Thank you. Yeah. So look at this question. This is also almost a similar question. You have purchased the machine for 12 lakhs. It is depreciated for, the useful life is 10 years. And you have depreciated already for 3 years. And at the end of the 3 years, you realized that the value has changed. The value of the asset has changed, right? It has increased by, they told it is revalued upwards. So it is increased by 60,000 and the remaining useful life is assessed at 9 years. So when the value and useful life both have changed, how will you record? It is the same way like we have done this only. Let us do this also quickly. So what is the cost of the machine? 12 lakhs. And useful life is 10 years, right? So depreciation is 12 divided by 10, which will be 1,20,000. Now, depreciation was already provided for 3 years, right? So 1,20,000 into 3 is how much? 3,60,000. So the carrying value will be how much now? Cost is 12 lakhs minus depreciation for 3 years is how much? 3,60,000. The carrying value will be how much? 8,40,000. Right? Till here, clear? I have provided depreciation for 3 years. So 3 years depreciation is 3,60,000. So the carrying value is 8,40,000. Now what did they say? After 3 years, what happened? Look at the question now. After 3 years, what happened? The machine was having a increase in value. Revaluation means what? Suppose the asset, had different useful lives, and when you're using that asset, you come to know that the asset value has changed. The fair value in the market has increased or decreased. When the value has increased or decreased, you will have to do the revaluation. The standard is giving you an option to revalue the asset. You can revalue the asset and show it at fair value. Suppose you purchased it for 12 lakhs, but after 2 or 3 years, you realize that the value is not 12 lakhs, it is 15 lakhs. You can record 15 lakhs. subject to the fair value that is existing in the market. Suppose the value is existing in the market, then you can record it. So here there is an increase in the value of how much? 60,000, right? So you have a revaluation surplus here. This is called revaluation surplus because the value has increased by 60,000. You will add that value to the cost carrying value of the asset. So total value of the asset will become how much now? 9 lakhs. How did we get 9 lakhs? We already had a carrying value of 8 lakh 40 and there was an increase of 60,000. So 60,000 have to be increased and total value will come down to 9 lakhs. Now, what is the revised useful life now? Revised useful life is how much? 9 years. They gave it in the question. If you can see, they are reassessing the useful life to 9 years. So depreciation will be how much? 9 lakh divided by 9, which is 1 lakh per year. So from today, you will start providing depreciation of 1 lakh. So when the value is revised or useful life is revised, from the date of revaluation or from the date when you are changing the method or from the date when you are reassessing the useful life, from that date, you will again start checking for the carrying value and then start providing depreciation. That's the only logic. You have to see on what date you are changing and then do it. This is clear, right? So when you have a revaluation, this we'll discuss the small part also. Suppose an asset was purchased. Okay, I'll give you an example. An asset was purchased for 1 lakh. You provided depreciation for 2 years. Okay, so 20,000 depreciation was provided. I have a balance of 80,000. On this date, if I revise the value, I will have a revaluation surplus. Okay, revaluation surplus. Suppose this value is going up. If there is an increase and decrease, there can be both the cases. If the value has increased to 1,20,000, which means how much is the value I had in my books of accounts? 80,000. But in the market, fair value in the market is 120, which means the value is increasing. 40,000 is the increase. This is called revaluation surplus. What is this called? Revaluation surplus. Okay. This has to go to your equity. It will sit in your equity as a revaluation surplus account, right? This decrease, how much? Let us assume the value has come down to 50,000. Okay. Then it is a decrease by 30,000. Correct? This will go to P&L statement. This too you have to remember. If it is a loss to you, you will take it to your P&L statement. If it is a gain to you, you will record it as an equity in your revaluation surplus. When you're showing your balance sheet, you will have equity portion. There it will be part of your equity as a revaluation surplus because it is a gain to you. It is going to sit in the shareholders' equity. If it is a loss, you will take it to P&L statement. So revaluation surplus or loss, you will have to compare the increase or decrease value and record it accordingly. That is revaluation, right? Now there is a small part. Yesterday we have already discussed what is an intangible asset and what is amortization and all. Not going back there, we'll do a problem. Okay, look at this. Look at this question. Kumar R&D has a registered patent. The patent meets the criteria of the intangible asset. So when it is meeting the criteria, you can record that particular intangible asset into your books of accounts. When it is meeting the criteria on 1st July 2021 and developed a cost of 28 lakhs and also spent 2 lakhs on the legal fees. Legal fees and registration, without this cost, you can't record that patent or you can't use that patent, right? So this 2 lakhs is the cost which have to be added to the cost of the patent. So what is the total cost of the patent? 28 lakhs plus 2 lakhs. And the patent is granted for 10 years. So you can use this patent for how many years? The books are closed on 31st December every year. They're asking you to show the patent account and the amortization account. These two accounts will almost remain the same like we have done the machinery and depreciation accounts. We will first do the calculation. What is the cost of patent? 28 lakhs. And then you add legal fees to it, which is 2 lakhs. this will come down to 30 lakhs, right? So the cost of the total cost of the patent is how much? 30 lakhs, right? Now, useful life is how much? They told that you can use this patent for how many years? 10 years, which means amortization. It is not called depreciation, it is called amortization. Amortization is how much? 30 lakhs divided by 10, which is how much? 3 lakhs per year. This is clear? Very simple calculation. Like we have done depreciation only, same thing, only the wordings will change. That's it. Okay. Now, how will you record this into your books of accounts? Very simple, the same way how we have recorded, right? So in patent account, it will be two bank account of 28 lakhs, two bank account of 2 lakhs, right? And by amortization account, this will be as on which date? When did we actually purchase this? On 1st July. Okay. On 1st July 2021. And when are we closing our books of accounts? 31st December 2021, which means amortization have to be only for 6 months. So 3 lakhs was the amortization, but in the first year you will only have to provide it for 6 months, which is 1,50,000. Right? So by balance carried down will be how much? How much is the balance carried down? 28,50,000. Okay. So to balance brought down 28,50,000. This will be on 1/1/2022. And on 31st December 2022, by amortization 3 lakhs. Only for the first year we are doing it for 6 months. Later on it will be for only complete year. So 3 lakhs. What is the balancing figure? Check the balancing figure. By balance carried down will be 25 lakh. Is this clear? Same way how we have done our machinery accounts only, same way we will do it, but the wording will change. It will not be depreciation, it will be amortization. When you purchase, you will record it on the debit side. When you are providing amortization, you will provide it on the credit side. And amortization account also will be same. You will write to patent account 1,50,000 and by P&L account 1,50,000. To patent account 3 lakhs by P&L account 3 lakhs. Right? So this is on 31st December 2021 and this is on 31st December 2022. Same way we have done the depreciation account, same way it will be there. Only difference is the amount. Why we have taken 1,50,000 in the first year? I think that is clear. It is because the patent was purchased on 1st July and our year end date is 31st December. We are only providing amortization for 6 months. And it will be still transferred to P&L account only. Amortization or depreciation, anything have to be transferred to P&L account. Okay. Now, one last question I'll take up. This is like, it doesn't take much time, just 2 minutes. We'll finish this. Look at this question. I'll close with this, don't worry. So there is a prime streaming company who have acquired the streaming rights of a movie for 18 lakhs with the contracted duration of 10 years. So you have purchased a streaming right. It is a intangible asset. The cost of the intangible asset is 18 lakhs and the estimated duration is 10 years. And at the beginning of the fourth year, based on the decline in viewership, they have decided to run only for the next 5 years. This is nothing but same way when the useful life of a machine has changed, how did you change? Same way amortization also will change. Very simple. What is the cost? We have actually purchased it for 18 lakhs, correct? And useful life is how much? 10 years. So amortization have to be how much? 18 lakhs divided by 10, right? So it has to be 1,80,000. Now, after how many years did we decide that the depreciation has or the amortization have to be changed? At the beginning, they told at the beginning of fourth year, which means 3 years ka amortization is already provided, correct? So what is the amortization for 3 years? Cost is 18 lakhs minus amortization for 3 years will be 5,40,000. Okay. So what is the carrying value? Carrying value is 12,60,000. Okay. Now, what did they decide now? They have decided that the remaining useful life is how much? Actually, useful life should be how much? 7 years. But they have decided that the remaining useful life is only next 5 years, right? Next 5 years only we can use this. Which means, what is the revised amortization? 12,60,000 divided by 5. How much? 2 lakh? 2,52,000. From fourth year and onwards, you will start providing how much amortization? 2,52,000. Initially, it was 1,80,000 amortization, but since you have revised the useful life, amortization has changed. So when your amortization is changing and the useful life is changing or the amount is changing, whatever is changing, from that particular date, you will start revising the amounts. Clear? We are done with the illustrations. I didn't give you any homework today. We have almost done. I think only illustration 9 was given to you as a homework. I didn't do ninth one because it is a similar thing. Any questions? Any questions? I'm so sorry, Priya ma'am. I took too much time.
No, no, it's
Today.
okay. Actually, we have another session at 2 o'clock.
Acha,
Students,
acha,
in
okay,
case of
okay.
any queries, you can ask in the next class also, or you can mail us also, and you can write in on BOS mobile app also. So you can ask your queries also. It will be replied. Don't worry about it. And kindly practice all the questions which she has already explained. She has already completed there in the class. You have to practice each and every questions from your own hand. See, I know the change in method of depreciation you've already done in your class 11th and 12th also. This is a very easier method. Provision for depreciation is also not that difficult. But the point comes out for change in a method of depreciation, whether it's prospective or retrospective. There could be a small true and false question also. So please go through whatever you're studying, go through everything, every concept thoroughly. Not only just running around through the pages. So thank you so much for coming, Reshma. I have read your query also, revision class, and for query also. We'll see if the time permits. We'll should definitely go for it. Thank you, ma'am. Thank you for your patient
Thank you.
time and
Thank you.
for devoting such time for us. Thank you so
Bye.
much, students. Yeah.
Thank you. Thank you, Priya ma'am.